Hi, welcome to the Investment Blueprint. I'm your host, Raghu Kumar from Rain. The Investment Blueprint is a podcast where I interview traders, investors, quants, and finance professionals in the space of retail trading and investing, with the goal of helping pass on their knowledge to you. Today, I interview Pawan, who's also known as Logical Trader. Pawan doesn't feel super comfortable revealing his full identity, which is why I think a lot of traders can relate to him. Hence, I will only refer to him by his first name. Pawan has a very active Twitter handle and a large following. His handle is Trader Logical, and he's first and foremost an algorithmic trader. Today, we talk about his trading style, how he got into trading, and certain things newcomers should know about when trading the markets in an active manner. So, Pawan, welcome to the podcast.
Hey, thanks, Raghu. Thanks for having me.
Awesome. So let's start with your general background. How did you kind of get into trading for the first time?
Yeah, so I'm basically an engineer, and as you know, right, engineers generally have a curious mind and they are looking for new things always. So around 2018, a few of my office colleagues actually used to trade commodities. So as you know, right, in India, the commodity market runs till late night, around 11 or 12. So after we are done with our office work, around 6:30, we'll look into crude oil or natural gas charts and zinc, copper, aluminum, all kind of commodities and trade them basically. So a few of those guys were actually making decent money, and they were all discretionary traders. And I also thought, hey, it looks very easy, and I should also try to do the same. And I then opened a Zerodha account, and that's pretty much how it started. And I think like it happens with every newbie trader after that, I made a bit of losses, but something strange, right? I don't have a story where I made huge losses ever, to be honest, because I was quite risk averse. So quickly I realized, okay, this is not working out for me. And that's how the system trading journey started from there onward. So somewhere around, I would say 2019 start, January, is when system trading journey started.
Got it. Got it. So you mentioned commodities trading. So were you also actively trading commodities back then?
Yeah, I was trading commodities unsuccessfully, I would say. Actively, but unsuccessfully. Was
Okay.
making losses. Yeah.
So, I mean, we can talk about, your non-commodities trading as well, but I wanted to know just generally, how is the commodities market, different fundamentally and also just as a trader, versus the general equity markets?
So from my experience at that time, what I found out was that commodity is more of it works more on the supply demand theory than the other markets, right? For example, if there is a scarcity of something, then the prices, once it start raising, it doesn't look back. So the difference I found compared to the indexes which I trade currently is that these indexes are more mean reverting than the commodities. You know, the trend in commodities, if they get established on a higher time frame, they last really long, right? Because there are seasonal and other factors which comes into play for a specific commodity as compared to a index which is a mixture of say 50 stocks or 100 stocks, right?
Hmm.
So the nature of markets and the strategies, I would say, are quite different. And then,
Hmm.
I mean, a lot of macros people used to track that time. So as I said, right, the profitable traders I knew that time, and the news flow which comes when the US market opens. So basically, in India, the commodity trading, most of the people do it in the evening only, because when the
Right.
US market happens, then the most of the active volume is typically seen in that time only.
Right.
So people will wait for the whole day, and then after 6 o'clock, they'll typically start trading. I think liquid options are not that liquid in commodities.
Hmm.
So, like if you have to trade indexes in India, right, the charges are huge if you trade futures.
Right.
But the options market in Nifty and Bank Nifty is quite liquid. So if you are smart enough, you can kind of create the same things using options. But for the commodities, that is not the case, right? So it's always
Right.
future options are quite illiquid there.
Right. Right. Right.
Yeah.
That makes sense. So you basically started off as a commodities trader then, and then you sustained some losses. What was that switch like? How did you kind of make that switch into equities trading? And was it difficult to do so?
So see, the thing is, if somebody has been a loss-making trader for a long, long time, I would say they build a lot of bad habits and discretion into their brain subconsciously, unknowingly, and that then the problem starts of becoming a profitable trader. It becomes basically more difficult to become a profitable trader in my
Right.
in my thinking. But in my case, it was just like 3 4 months, and then
Mm-hmm.
I very quickly realized, okay, this is not working out for me, and I started reading about different kind of systems. So I mean, it was, to be honest, it was not that difficult. It
Mm-hmm.
sounds very different than what people have to say, but it was not very difficult, to be honest, because luckily I landed into all the right places at the right time, I would say, to
Mm-hmm.
be to have a journey which starts in the right direction. And as I was almost a clean slate, right? So from
Mm-hmm.
day one, or you can say, becoming a systematic trader, rule based. So once you have a systems in place and risk management, money management, your losses are never too big to impact you, right? Because you can always control it, your exits and your position size accordingly.
Sure. Yeah.
So yeah, it was quite easy, to be honest, not that difficult.
Got it. Got it. So have you always been a systems trader?
Yeah, when I became profitable from that day onwards, I have always been a systematic trader.
Wow.
Only 3 4 months of commodities is what where I used to place randomly.
Got it. Got it. So you burnt your fingers and then you made that pivot.
Yeah.
Um, got it. Got it. So how long have you been trading systematically?
So now it's been close to 2 years of profitable
Wow.
trading, and before that, it took me almost 8 to 9 months to come up with the systems. Backtest them. Had to learn Python, and then code my backtest engine, and then live algorithms, which trade the live market. So it took me almost that much time before I start. And in 2020 January onwards, I started trading 100% using automation with my own back-tested systems. So from
Got
then
it.
onwards, it is like the algo keeps on running. That's all.
Got it. Got it. Can you share some general statistics regarding your performance and things like that? Just general.
Yeah, so when I started logging everything on Twitter.
Okay.
So from 2020, I started as an experimental account with just 9 10 lakh rupees, and
Hmm.
just because even if we have a system, profitable system, and for me, I am working, my wife is working, we also had capital, to be honest, a big capital which we could have deployed even that time. But
Hmm.
our brain doesn't handle the absolute number that well, even though percentage
Right.
wise they are very small. So I decided to start small, and we started with some 9 10 lakh rupees, and in next 6 months we generated almost 100% return on that capital.
Wow.
So I logged, and but the other number is also equally important, that this 100% return came on a 22% drawdown. So
Oh.
the thing is, if we seek the returns, crazy returns, then we should be able to handle crazy drawdowns as well.
Right.
And as our capital grows, we obviously can't, at least I can't. So I kept on becoming more and more conservative. And obviously, the returns and drawdown both have been coming down. So
Sure.
recently, I started trading with 1 CR now in two different accounts,
Okay.
and I am up almost 36 37% in last 4 months, I think. Yeah.
Wow. That's pretty impressive.
Yeah.
So since you started, systematically trading, how many times have you had to revisit your models and make changes and things like that? And how do you kind of do that? Like, how do you think about that whole process?
Yeah, so this is very interesting, to be honest. Like,
Yeah.
see, there are two type of systems I trade now. So one is the trend following systems, and second is option selling intraday systems, which are basically, I would say 30% trend following, and then also gets benefited a long lot from theta intraday decay, which happens in the market, right? So
Hmm.
let's talk about the trend following, because that is where most of the development happened, right? So
Okay.
one thing I would say is that in 2 years of system development, my entries never changed, Raghu.
Okay.
The Because I feel I from day one I felt like the entries are not that important, to be honest. So
Hmm.
once we have figured out a profitable way to enter into a trade, doing a lot of tweaks there doesn't make much difference. So
Hmm.
I kept my entries same always. What I did is I did two things. I manually saw charts for last 10 years of 5, 10, and 15 minutes. So I had to bar replay bar by bar. I have to print the next candle and next candle. So it took me 6 months of manual chart reading.
Hmm.
And what I was able to do is I was able to identify certain patterns in which trend following systems will fail more often than not. I would
Okay.
say 80% of the time, if you trade a trend following setup, once X thing happens, then it fails. So I was able to figure out these filters of when not to trade you know
Hmm.
so we don't need to trade all days. Even though it's intraday trading, it doesn't mean I have to place order on every day, right? So
Right.
I was able to figure out filters which reduced my number of trades. So I would say
Sure.
this took a lot of effort on top of building the entries. So first was entries which never change. Second
Hmm.
comes the filters which are like when not to trade. And then third and most important is trailing stop loss and exit strategies. This is
Hmm.
where I would say I'm still improving and still adding a lot of things, right? Because
Hmm.
because there are multiple ways to exit a trade, and
Right.
this I feel is where a lot of improvement can be made to system. So if you see Indian Twitter, especially Indian FinTwit, where a lot of Indian traders discuss how they do trading,
Right.
almost every systematic trader I've talked to who trades using algorithms or who has a fixed set of rules, right? 99% of those people do not use a trailing stop loss. So they have a
Hmm.
very simple, like they'll entry, they have a stop loss, and they exit either at where if their stop loss is hit or they exit the EOD.
Right.
And I think every one of them is says that they are having difficulties in finding a way to trail, which actually improves their system performance. Luckily, I was able to derive a lot of ways to trail, which
Hmm.
actually improved both returns and reduced drawdown at the same time.
Got it.
So these two things, especially the filters and the trailing stop loss, or you can say the exit strategies, these have been improving a lot, I would say, over the last period of last 2 years in my trend following systems.
Got it. Got it. So essentially, what you're saying is you build a system, your entry rules don't change, and then you're looking for additional filters which lower your frequency of trades, and you add, trailing stop losses, right? And that's how you've kind of been able to keep up your ROI. So regarding those filters, you talked about how you look at charts and you're looking at, certain formations in a 5 minute and 10 minute chart and so on. Can you share a little bit about that whole process? Like, just generally, what are you kind of looking for? And is that something that can be automated?
Yeah, so let me give you a few examples, right? Basically,
Sure.
see, how I look at charts is I look at charts is two things, right? Who are in control, either
Hmm.
buyers or sellers. At the same time, who are the people who are sitting in huge profit? Because they also will act very differently, right, if they are sitting in huge profit. So
Hmm.
say I'll give you one example, right? For example, say there is one pattern which I trade, right? I can share that, right? So that pattern is like, say you have a prolonged uptrend, right? So prolonged
Hmm.
uptrend means the market has been just going up, 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 and for let's say consecutive 5 days or 10 days, right? Or
Yep.
say in terms of moving average, if you want to see, say market has not given a single close in last 10 days below the 20-day moving average. There are various ways to determine a prolonged uptrend, right?
Right.
So now we know that, okay, the market is in completely control of one side of people, and say tomorrow we have a huge gap up, right?
Hmm.
But we do not get any follow through of that gap up.
Hmm.
What will happen is all these people who are sitting in huge profit would like to now take their profits off because they got a huge gap up and there is no follow through, right? There is no follow through
Right.
buying after that.
Right.
What then happens is, these people who are taking their profit away will actually uh, start a downtrend, and you'll see a huge sell off, or you can see a long unwinding that day, right? Where all
Hmm.
the people who are long are will square off their position, and you'll see a long unwinding. So one of my biggest trades, which I did, and
Hmm.
I made around 22% in a day. So that was
Wow.
based on this pattern,
Hmm.
and I shared it on Twitter after that happened. And recently, I've been posting few charts as well on Twitter. So that pattern was exactly like this. The market was in a prolonged uptrend and it gapped up, and then it did not have a follow through, right?
Got it.
So, and similarly, if it is in a prolonged downtrend and it gaps down and it doesn't have a follow through, right? So then market will start moving either because of short covering and long unwinding. Now,
Hmm.
these are the patterns which do not occur very often, right? Because the first
Got it.
condition of having a prolonged uptrend or downtrend has to meet, right? Which itself take
Right.
8 to 10
Is
bars
rare.
for this setup to happen.
Right.
But the profitability wise, it is quite good. Yeah.
Interesting. So when you took that trade and generated 22%, was that like driven by system
Yeah, yeah,
completely?
it was completely
Oh
system.
wow.
Yeah.
So basically your system knows that when those situations occur, you should bet hard and you should.
Yes, yes.
Got it. That's amazing.
And another thing is bet size, right? So
Right.
I actually have multiple setups which I trade, right? And
Hmm.
I have ranked them in a order of profitability, right? So I don't risk the same amount on all setups. So there are,
Got it.
for example, today I have made a loss of around 3% because
Hmm.
one of the setup was a very high conviction setup for me, which
Hmm.
typically has a 1 raised to 6, 1 raised to 7 kind of risk to reward, right? So
Hmm.
I risk more than the typical risk profile of what I have for my portfolio, right?
Hmm.
And that's how I'm able to generate higher returns. So treating not all setups should be treated equally, right? Depending on a lot of conditions. Yeah.
Sure. Yeah. So let's talk about building a system from scratch, right? So obviously, a lot of our listeners are looking to probably trade the markets actively, and hopefully, they're interested in building their own systems. How should one just generally think about, building that first system? What are things they need to know, and what are things that they should be aware of, and things like that.
Yeah, so actually, if somebody is very new to market, like I was that time, right? So I can speak from that perspective because that is the path I have taken, right?
Right.
So you can see, obviously, there is no replacement of screen time. Somebody who has watched charts for last 15 years, you cannot just come to market and replace everything by coding something, right? So
Hmm.
what I did that time is I bought data for last 10 years. And as I told you before, right, I started going through charts. So now if
Hmm.
somebody else wants to build a system, first he has to go through hypothesis, right? There are a lot of hypotheses openly available, right? For example, the turtle traders, right? They used to buy on a
Yep.
20 bar high break or 20 bar low break, right? Similarly, there is another book called Chaos Theory by Bill Williams, right? So this
Hmm.
guy used to buy on break of a fractal high or fractal low, buy on a break of the last two swing high, sell on a break of last two swing lows. So what I mean to
Hmm.
say, there are a lot of hypotheses openly available. That can be your first starting point, right? So take
Right.
some rules which are openly available, which have been successful for somebody for some market in the past. It might not work for you, but take those rules, right? Now
Sure.
start going through the charts of last 10 years. So you say you pick one quarter for last 10 years and you try to test your system manually. Raghu,
Hmm.
manually testing is really, really important, especially for somebody who does not have a screen time uh, uh,
Hmm.
with him, because otherwise you do not get the feel of the charts and how the market really reacts, how it works. It's just a backtest report, and it doesn't tell you anything. It doesn't tell
Right.
you how much open profits you actually gave up at the end of the day. It doesn't tell you how many times your trade moved in loss and then ultimately ended in profit, and a lot of things you get to know about your system when you watch real charts. So step one, pick some hypothesis. Lot of openly available hypothesis for trend followings are there. Step two, pick a market, buy some data or arrange some way some data, and start watching charts and start manually backtesting it, right?
Sure.
uh, Obviously, I'm pretty sure that for a trend follower, any all of these rule works in long run, to be honest, because
Right.
all we are doing is we are buying what is going up and selling what is going down.
Right,
The
right,
right, the
right.
edge here is only risk to reward and how we trail our profits and how we exit. That's all.
Right, right.
Right.
So let's
So
talk about yeah. So let's talk about risk management, right? I think it's kind of similar to what we're talking about here. You mentioned bet sizing, and that's also kind of associated, with money management, I would say. But just generally, when it comes to risk and money management, I think that's something that something a lot of traders probably overlook. What are some general guidelines when it comes to ensuring that your risk management is on point as a trader?
right. So, from a system trader perspective, right, once we
Yeah.
have a system in place, right, we have the system parameters like the win rate, the risk to reward, and average winner, average loser, things like that. We can determine all these things from our system stats. The first and foremost, the important thing is your system should be backtest for at least 8 to 10 years. It
Hmm.
should cover all the market cycles. Sometimes what people do is, people, for example, COVID has been a great trending years. They'll
Right.
backtest any positional system. It will give crazy return on both downside and upside.
Right.
You just buy and hold, it is giving 100% return, right? So I
Right.
mean, if your backtest window is very small, your system results would be such that you will bet size too aggressively, because you think you are kind of god, and you are performing to the next level, and you found some holy grail or something. So once the step one is like, we have to have a backtest for 10 years. Now let's assuming that somebody has done that, let's talk about how I would position size, right? So
Hmm.
first thing is that somebody who is trading a system has to differentiate between positional and intraday system. The thing
Hmm.
is, even if let's say you have a risk 1% in a positional system, and next day market gaps down 5% below your stop loss. I mean, even though your risk was R, you have actually lost 5 hours, right?
Right. Right. Right.
But other than exchange going down, this can't happen in an intraday system, provided we are trading a liquid market.
Right.
So first, people should differentiate between the positional and the intraday. For positional, they should look at what is the total value of the contract they are trading, and how much leverage they are taking on top of that. So, say for example, Nifty at currently 18,000 and lot size is 50, we can multiply 18,000 into 50. That is the total value in rupee we are trading. So
Hmm.
forget the margin what NSE is asking, and you think how what is the value at risk,
Right.
and calculate accordingly. But for intraday, and that is one of the major reason for me to trade intraday, is that when the markets are open, my exits are defined by me and not by
Right.
some news event or something. Provided NSE doesn't go down, which actually happened once in last few
Right.
years.
Yeah. Yeah.
Uh, so for those, we can do a stop loss based position sizing. For example, taking certain percentage of your capital as a risk. So now, assuming that somebody is an intraday trader, right, and he is able to exit where he intends to, right? How should
Hmm.
one decide the position size? So I made a video on that on my YouTube channel as well. Is like the biggest
Okay.
factor here is what is your win rate,
Hmm.
because win rate will decide how many continuous losers you can have in a row. So
Hmm.
basically, a system with a 30% win rate can almost have 27 or 28 losers in a row, if I'm not wrong, based on probability. But a system
Hmm.
with a 70% win rate can only have 8 to 10 losers in a row.
Mm.
So if we
Right.
think worst case can happen, right? And if we
Right.
keep on risking 1%, 1%, 1%, over the next 10,000 trades or over the next 1,000 trades, we might hit a scenario of continuous 25 losers. Are we
Right.
prepared for that or not, is how we should decide our money management.
Right. That's a really good point.
Right.
Yeah.
So for example, just now I'm having continuous 6 red days.
Hmm.
So but my total drawdown is around 5%.
Okay.
So I have
So it's
taken
controlled.
almost,
Yeah.
so almost more than 50 trades I have taken, but the total drawdown is 5%. So that is because I'm position sizing in a way that my high win rate system have a higher risk profile, and a low win rate system has a risk management such that it can handle multiple series of losses in a row, basically.
Got it. Yeah, makes sense, man. One thing I also wanted to kind of ask you about is just, improving, your execution, right? So just generally speaking, how should a trader think about that whole thing in terms of getting better fill rates, or, maybe finding a good broker to trade with and things like that?
Raghu, this is really, really important to be honest. And I think we had a discussion earlier as well. Like it is
Yeah.
my main edge, I would say, that how
Yeah.
close to how our real trades can be closer to our back test or even better than back test, to be honest, right?
Right.
So obviously, it all depends on the kind of systems we trade, and the execution has to differ between different systems, right? The execution for a breakout system will be very different than an execution for a delta neutral selling system where both sides we are entering at the same time, right?
Right.
Because if market is kind of stable, say we are entering both sides, even if we get a positive slippage of 1 point on one side, we'll get a negative slippage on the other side, and overall it cancels out.
Right.
So in a liquid market, it is okay to place a market order, series of market orders for a delta neutral kind of things, right? And overall your average price would be okay. But the same does not apply to anything where you are entering only one side, right? Because now
Mm-hmm.
you it if it moves and you it moves away too much, it is also a problem. At the same time, if you are getting a really bad pricing, that is also a bad thing. So how do we handle both is finding the best of both worlds, basically, is what I'm saying.
Yep. Yep.
So say take an example. Okay, now how did I build my execution algorithms, what I have deployed currently, right? So
Mm-hmm.
execution algorithms, at least you have to have tick data to develop those. Reason is that
Yep.
a 1 minute is a too bigger a time frame, where you can't judge your actual fills, right?
Right.
So obviously the real tick data nobody gives in India, but what we get is a second data, basically. So
Right.
it's a
Right.
1 second timestamp data is what we get.
Timestamp
Uh,
data. Right. Yep.
right, and it also have few ticks missing, but it is much better than a minute data.
Right.
So give you a very simple example. Say for example, our system has triggered a long in back test at 9:20 in the morning,
Mm-hmm. Mm-hmm.
and the Nifty was, let's say, 18,000 that time. I
Mm-hmm.
have to buy at 18,000, then my back test will match my real results, right?
Right.
If I buy less than 18,000, my
Mm.
real results would actually be better than my back test.
Right.
And if I buy more than 18,000, my real results will be obviously bad than my back test.
Right.
What I found in breakout systems is typically the breakout system is are done on a support or resistance where there are always mean reversion trader, or the trader which expects the support or resistance to hold. They are
Mm.
always there. So for example, we are at 18,000 and
Mm.
market is going up, and
Mm.
18,100 is where we want to go long.
Mm.
There are people who are thinking, hey, 18,100 is a really good resistance, and if market comes here, I should short it.
Right.
Right. So what I found is that for such breakout system where we are betting, where you're buying high and selling low, right? There
Mm-hmm.
are always a chance to get a better fill if we place limit orders below after our trigger has happened. So
But
what
how do you back test that though? Like when
exactly?
you
So now I'll,
right.
I'll come
Yeah.
to that. So
Yeah.
now coming to my example, we have a signal at 18,000 by 9:20, and my goal is to get a fill at 18,000 or less than 18,000 if possible, right?
Oh.
What I'll do is say I'll place a limit order at 17,995. Now, how do I
Mm-hmm.
backtest it, right? How do I
Mm-hmm.
backtest it? What I do is I have a tick data from 920 to 921 for
Mm-hmm.
next 60 seconds.
You look at the LTP or
What I found is I basically calculate the probability of price having a LTP below 18,000
okay.
in the next 60 seconds. What is the chance
Mm.
that price will trade a tick or two below 18,000?
Okay.
You'll be shocked. It is almost 80 to 85% that happens.
Oh wow. Okay.
So that is
I see.
because, as I said, right, there are always people with opposite views there.
Right.
So what I found is now, okay, but at the same time, if there has not been a single tick below 18,000,
Mm-hmm.
in my backtest also I should show that I did not get a fill, right? If I am implementing this execution algo, because
Mm-hmm.
my limit order at 17,995 will not get filled if price
Right.
doesn't go below 17,995. So in
Right.
my backtest I should make sure that if in the next 60 seconds I did not get a fill, then my backtest entry should not show 18,000, but it should show the entry which was at 921. So are you getting what I'm
Right.
saying?
Correct. I understand. Yeah.
So basically, I give myself a window in which I try to fetch a better price, and I know the odds are in my favor 80 to 85% of the time in a
That's
liquid
amazing.
market.
Yeah.
And if I lose on the remaining 15%, it is okay for me, you
Great.
know. And that is how I come up with a lot of execution strategies, what I do now.
Wow. And that's not easy to do, right? So that probably gives you an edge, I'm guessing.
Yeah, so it this tick based back testing was really difficult, really, really
Yeah.
difficult.
Yeah. Have you thought about incorporating any sort of ML or machine learning or advanced kind of diagnosis in terms of just pouring through all your previous trades and improving that logic, or no?
It might be controversial, but I honestly don't believe that
Believe in ML.
this can do in trading, because I feel
Yeah.
it's too random.
Yeah.
And how I stopped believing is, see, sometime we have to be smart enough to learn from somebody who has tried and failed. So
Right.
I know very smart engineers in Google who have done all this, and and I took the basically judgment from there that
Sure.
it is not worth it.
Got it. Makes sense. Yeah.
Yeah,
Cool. So, as a last question today, Pavan,
yeah,
this is what I always end my podcast with.
yeah.
Where do you see yourself, and your general trading business in the next 5 years? In 5 years from now?
Yeah. So again, my goal with for from trading also will be very strange than others. I don't
Okay.
want to leave my job, to be honest.
Yeah.
My only thing is that now when I'm working, right, I don't feel any pressure from anybody in my job. So I enjoy a lot. I do a lot of interesting work, which keeps my intellectual brain going. So I just want to do my job. But I want to grow my trading account to at least say 15 to 20 CR, and then just focus on maybe generating 2% or 1.5%, and
Sure.
spend it to live my life. Because what I feel is that I'm 31. I have some 20 years of living my life to fullest, and I don't want to own a big startup or make a company of 200 crore and then leave it to others for later. I don't have goals like this. So I want to
Sure.
spend the money what I earn, and I think I have enough freedom even now, where I don't feel pressured from my job. So I'm enjoying my job, and yeah, that's what my goal is: growing my trading account, compounding it for next few years, and reaching to somewhere around 15 CR mark is what I think.
Yes, I mean, it sounds like you're on your way there, and I totally agree with you. I think when you trade in a relaxed manner, right, when you
Yeah.
don't have that pressure, then it actually leads to better results. So it's a win-win situation.
Yeah, just to
So
add
yeah,
one point, right? Especially,
yeah,
see, most of the people, right, they are full-time traders, and I agree, right, there is a trend, but I feel that having a full-time job gives me all the psychological advantage to handle the drawdown, because my monthly bills and my lifestyle does not impact at all with my trading results, to be honest.
right,
Yeah.
right. And you can even argue that they both help each other, right? So maybe the trading keeps your mind sharp, right, which you're probably applying to your job, and vice versa, like you said. So cool. Thank you so much, Pawan. That was an amazing interview, and I'm sure we'll have many more conversations. Thank you.
Thanks, Raghu. It was nice talking to you, and thanks for having me, man. Thanks a lot.
Cheers. Bye.
Cheers, man. Bye. Bye.